Hello, and welcome to Must-Read Research on B of A Global Research Unlocked. In this podcast, we offer quick summaries from the prior week's most interesting and impactful research. I'm Candace Browning, Head of Global Research at B of A Securities, and we're recording this episode on Monday, August 3rd, 2026. A few fissures are showing in the market scaffolding, but not every sign of strain means collapse. This week, we focus on benchmark concentration, scarce hazardous waste disposal capacity, and widening AI-linked credit spreads. Let's start by taking a closer look at what's actually inside some of the market's most widely owned indices. And that's where we're seeing new records in concentration, in style shifts, and in trading volume. Now, one would think the Russell 1000 Growth Index holds 1,000 stocks. But fun fact, it only holds 365. And it is as concentrated as owning an equal-weighted portfolio of 21 stocks. So it could actually be called the Russell 21 Growth Index. Savita Subramanian's latest benchmark monitor suggests style indices are even more concentrated. The 10 biggest Russell 1000 names now account for 35% of the index, and each have market caps greater than approximately $1 trillion. And changes in the constitution of these indices and other passive vehicles, such as ETFs, really matters. For example, recently, big tech style shifts in the Russell 1000 Value and Russell 1000 Growth triggered a 49% and a 75% volume surge after reconstitution of the index. And now that leveraged and inverse ETFs have swelled past $75 billion, just a 1% move in those indices triggers billions in momentum amplifying trading. So with concentration at records, Savita sees an attractive setup for value, mid-cap, and small-cap benchmarks when the market broadens. From benchmark concentration, let's turn to an industry where scarcity is becoming an increasingly valuable asset. Turns out, hazardous trash is actually a new treasure. Machinery, engineering, and construction analyst Nandita Nayar argues the industry is benefiting from a rare mix of tightening capacity and multiple secular tailwinds. No greenfield hazardous landfill has been permitted since 1996. No commercial incinerator has been built in the U.S. from 1997 to 2017. And the ratio of waste generators to disposal facilities has nearly doubled to 23.3 times. A good example of a company benefiting from these supply-demand dynamics is Clean Harbors, which controls more than 65% of North America's commercial incineration capacity and is expanding its footprint in high-growth industrial markets across the Gulf Coast. Just as scarcity is reshaping the economics of hazardous waste, stress is beginning to surface in another corner of the market: AI financing. After weeks of resistance, the AI unwind in tech stocks and investment-grade bonds has finally led to fractures in high yield. Head of U.S. credit strategy Neha Kota notes the high-yield index has widened approximately 20 basis points since July 22nd, with the pain concentrated in AI data center credits, which now trade 110 basis points cheaper than non-AI high yield. Interestingly, 75% of the $52 billion AI-adjacent high-yield universe is project financing, tied to facilities leased to investment-grade tenants. These bonds are repaid by lease payments from names like Google and NVIDIA. While the bonds already screen cheap, With $30 billion of high yield and $62 billion of investment grade supply still to price in the second half, Neha favors legging in over trying to time the bottom. So, from concentration beneath the surface of major benchmarks to scarce hazardous waste capacity to widening AI-linked credit spreads, those are the themes shaping the conversation this week. Thanks for listening, and we'll be back next week.
Bank of America and B of A Securities are the marketing names for the global banking businesses and global markets businesses, which includes B of A Global Research of Bank of America Corporation. Lending, derivatives, and other commercial banking activities are performed globally by banking affiliates of Bank of America Corporation, including Bank of America N.A., member FDIC. Securities, trading, research, strategic advisory, and other investment banking and markets activities are performed globally by affiliates of Bank of America Corporation, including in the United States B of A Securities, Inc., a registered broker-dealer and member of FINRA and SIPC, and in other jurisdictions by locally registered entities. Copyright 2026 Bank of America Corporation, all rights reserved.